Well, hey there, everybody. Welcome back to another edition of the Forex Market Preview. We're going to be taking a look at some Fibonacci stuff today. Be showing you a little Gartley pattern on Aussie dollar that's setting up, as well as some additional Fibonacci stuff on Canada yen, and we'll see what else we can find today. But I wanted to start off talking a little bit today about performance and about what happens over time if you continue to trade consistently, because that's something that I harp on continuously in this Forex Market Preview video is, hey, consistency, discipline, consistently discipline, even when things are not going well. Continue to trade your plan. Your plan will eventually play itself out as long as you've done all of the hard work at the beginning, which is to, make sure you back tested, understand forward testing, non-subjective rules, all of that stuff, making sure your trading plan is testable, verifiable, and repeatable. All that stuff that I teach in both the free seminars and, more importantly, the more detailed things that we get into in the 12-week transformation course, which I know many of you have taken. It's critical that we understand what happens over time because things are not always good. I'll give you for example. This week in the Syndicate, which is, of course, the private group that I run every single morning. We do War Room every morning, and I post all the trades, and Akil posts all of his trades, and we keep track of the profit and loss from those trades. And we do that not to run some signal service that you can get anywhere, but the reason we do it is so that you get a chance to see what happens in the life of a real trader over time. And we also do it to showcase the value of portfolios, and there's a lot of different reasons that we do it. But I just want to make clear, one of the reasons we don't do it is to provide you a signal service. That's a completely different product that I'm not interested in providing. Or not in that fashion. Let me put it to you that way. It's not that signal services aren't a good thing. They can be a very good thing to help you grow and understand. But that wasn't what the Syndicate was designed to do. And so last week in the Syndicate, we did about 353 pips in profit. The week before that, we did about 300. So we're looking at well over 600 pips in the last 2 weeks in the Syndicate. And over the course of the year, we're up almost 50%, maybe 45%, somewhere in there on the year. And when I say that to a lot of people, they get really excited, like, oh, wow, yeah, where do I sign up for that? That sounds awesome, 300 pips a week. Well, if I can do 300 pips a week every single week for the next, 52 weeks, think of all the money I'll have. Well, the funny thing is that's not really the way it works. And one of the things that I wanted to showcase through the course of the Syndicate and coming together every day in the War Room is the good, the bad, and the ugly. I wanted you to be able to see what happens all along the way. Because you're going to have periods of really good trading, periods of poor trading, periods of times when you wonder what's happening and whether or not the thing is really going to work or not. And it gets really, really frustrating. And it's no different in the Syndicate where we've been trading. So if I pull up the P&L. So this is the cumulative track record of the Syndicate over the course of the last year. Now, we always do this on a yearly basis, so at the end of every year, we start over. Everybody starts from zero, January 1st. And so this is by weeks. This shows what happens. We're at week 40. We just finished week 42 of the year. And as you can see, initial drawdown got a pop of about 300 pips or so. Then we instantly gave almost all of it back, coming into 6 weeks. So 6 weeks in to this trading, we've done maybe 250 pips total, 300 pips total, right? Coming into week 6. Then we hit a string of weeks where everything's just going right. Boom, 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 boom. And by week 10, we're up over 1,000 pips. Then we see this little decline, a pop. We're still feeling good. Little tiny sideways week. Nobody's complaining about that. Everything's going good. Boom. We hit week 21, and look at what happens. We get a retracement. Hey, we're not worried about it. We've seen stuff like that before. And then we trade sideways for a couple of weeks, slightly higher. Then we come back down and we retest where we were before. Still not worrying that much. Then we rally, don't quite get back to break even, and then we fall off. We break into new structure low. Still can't get anything going. Market drops again. Now we're 10 weeks further along. So the 21st was where we hit our equity highs. 10 weeks later, boom, we're at new structure lows. Now, a lot of people will look at that and they will say to themselves, oh, yeah, but Jason, if I'm already up 2,000 pips for the year, I'm not going to worry about that. That's not going to affect me psychologically. Bull. It affects everybody the same way. Nobody likes to have theirs to feel like the golden child as they're working all the way up the ladder, only to find out that for 10 solid weeks you do nothing but trade sideways to slightly down. That affects everybody mentally. And then, of course, you've got the traders who came in. They missed all of the first part. They didn't even join the syndicate until week 24. And so they've sat through 8-10 weeks of just back and forth trading with no new equity highs. And what are they thinking? Well, they might be thinking, so, well, this stuff doesn't work. This isn't happening. I don't want to be part of this, because they missed what happened before. Those guys who followed us all the way up, they recognized, because I was telling them the whole time we were going up, I said, don't get excited. Eventually this run will end. We're not going to do 600 pips a week every week over and over again. That doesn't happen. We're going to hit a drawdown, and it's going to affect you mentally. And sure enough, long about week 21, we traded sideways, and we realized a few weeks later, hey, we're not going higher. And by 10 weeks in, I was telling people, look, we're in a drawdown. These are the summer months. We're moving into the summer weeks. And I said, this is typically not very good trading. We're going to do our best to continue to trade our plan and hopefully preserve our capital so we can limit our drawdowns. But things are not going well. This is not a time when you come in and you're excited about getting behind your screens. And I talked with you guys in the syndicate about the back and forth nature of it and how much of a struggle it was. But what did I tell you? I said, don't worry. Better days will come. We will break out of this the same way that we break out of every single drawdown. Just like the string of winners ends, the string of losers ends too. As long as you continue to trade your plan. But no doubt in here you've got those people who also say, well, Jason, maybe your system isn't working anymore. Maybe it's not happening. Maybe you need to change something. Because that's what they're telling themselves over and over and over again. Every time they start to feel a little bit of pain, every time things start to go just not perfectly, they start asking questions. Well, maybe I need to make a modification. Well, I know I've done all that testing, and the testing said I should expect to see these types of drawdowns, but I don't like the way that makes me feel. And so maybe I just ought to make a quick modification because the market's changed, obviously. And wouldn't you know it, that change causes them to make other adjustments, which causes them to stop following their rules, which leads to greater losses, which leads to doubling down on trades, trying to win it all back at once. And now we're right back on tilt. Now we're right back into the old way of doing things. That way that's cost us $10,000, $20,000, $30,000, whatever it is, maybe more for you. Why? Because we left our consistency, we left our discipline. Well, naturally, guys, you can see what happens here. Last week, or not last week, but the week before, nice little rally, came up, almost retested the highs, traded sideways the week after that, and this week, so this was a sideways week. So I had 300 pips here, sideways week, another 300 pips here, takes us up over 2,500 pips for the year, and we're into new equity highs. And you want to know what's going to be really interesting is if we continue to trade this. Now, we start over every single year, but let's say that we didn't. Let's say that we just continue to add to this little track record here. What you would see right here, this consolidation here, this sideways action, as this chart gets wider and wider, that little area tends to get smaller and smaller and smaller until it becomes just like this little blip on your radar as your equity curve continues to climb. But that's the kind of consistency. And guys, the reason that I started the Syndicate program was to show you this in real time. So it wasn't something that I could hide from you when we were having a bad day. Hey, if we lost 200 pips yesterday, I got to come in the next morning in War Room and we got to talk about it. I got to share it with you. You guys are going to see it on the P&L. But hopefully it gave you a sense that, hey, if I continue to follow my plan, this is the culmination. This is how it all works. We started out well. We traded sideways. Boom, we just moved into new equity highs. And what I want you saying to yourself, what I'm hoping you're thinking is, hey, this stuff really does work. Hey, all that crap that Jason spews all the time about staying disciplined and following your rules and all that stuff that, is boring and monotonous and makes me want to kill myself. Hey, maybe there's some truth to that. Maybe that's something that I want to be doing in my own trading. And hey, if I'm not successful yet, maybe, just maybe, I ought to give a little bit of credence to what he's saying. And so I hope that this little discussion today, the little exercise, has helped you kind of work through that. And hopefully it opens up your eyes. And if you want to join the Syndicate, you can. It's like $1 for a month. I'll let you join for $1 to test it out. And then if you like it, you can stay on. You can get a yearly subscription. I don't care. But this program is designed for those people who are in it for the long haul and who want to see it, who want to be able to look over somebody's shoulder. And so I hope that these guys, me showing it to you, gives you some idea of what these guys who've been in the Syndicate for the whole year have been learning and going through. Because it's powerful. It has a powerful effect on your psychology. Now, the other thing that I want to tell you about before I get to the charts is I have something very big coming up. It's a new course. It is something very different. Something that I guarantee you no other coach, no other guy who teaches Forex stuff or any type of trading has ever taught any of you. The guys who I just don't, I'm still shocked that I'm going to teach this class. But this is designed for people who are really trading well. And they're at that point in their life where they're trying to figure out, well, do I want to raise capital to trade? Do I want to just continue to trade what I've got and make my 10%, my 20%, my 30% a year and just try and save and sock away as much money into my trading account as possible to try and grow it? Or do I want to try and raise capital to help other people so I can maybe grow a larger account, which would mean more money for me? And if that's kind of where you're at, then I want you to pay real close attention to the emails I'm going to be sending you this week. It's only going to go out to people who are on the Forex Market Preview list. Now, if you get this video by email, then you're on the list. But if for some reason you're watching this on YouTube or if for some reason you're not sure whether or not you're on the list, I will leave a link under this video on YouTube and on the website where you can sign up to make sure that you're on the Forex Market Preview email list, because those are the only people who are going to be getting this email about this training course. It will be a one-time only course. It will only take me a day. So it is not something that you are going to have to sign on to for weeks and weeks and weeks. And I don't want to let the cat out of the bag too much. I've got videos prepared that are going to explain everything that I'm doing, but it is a radical departure from what I have been doing over the last 5 to 7 years. And I know it's going to change a lot of people's lives. I know it's going to help a lot of people, so that's why we're doing it. But that's all I'll say. Just make sure you're on that list if you're interested. If not, don't worry about it. But let's take a look at a couple of things here. First of all, Aussie dollar. Now we'll just look purely technical here. All right, we have a Gartley pattern. Here it is. Let me grab my triangle tool. Swing high to swing low here, followed by a retracement back up into a 618. We have a very deep, almost 886 retrace. It probably is an 886 retracement here of the B to C leg. And you can see the 127 extension here completes right on top of the 886. Decent sell, look left. There's your structure high, stops above the structure high, looking for the market to make a move back to the south. So this is a corrective move in an otherwise bearish market. So we get this bearish move, market puts in a little pattern, and then should return to its bearish momentum. And what we'll try and do is capture a little bit of profit as it makes that retracement. Dollar yen, we're going to go Canada yen here. Canada yen has a beautiful Fibonacci inversion trade here, which I basically inverted this leg of the move with a Fibonacci extension. And you can see the 1618 coming in right here and structure coming in just above that. So what I've kind of blocked out here is a range. So I am looking for the market to come up into this zone. Excuse me. As a potential sell area. And so that's what we're looking for right now. If the market can rally up into this zone, preferably up into this 94.25s area, then we'll drop down to our hourly time frame and we will see if in that zone we can find any indication that the market may be looking for a reversal. But that is what I'm watching right now on Canada yen. And if I cycle down here to Aussie yen, a very simple move here. Let me show you what I drew in. A market is breaking structure, just broke to the upside. Look left, structure leaves clues. Here's where my structure is, right? It's not exactly right, but pretty doggone close. Somewhere in there. There's my structure level. So I'm looking for the market to rally back up into structure. I'm going to grab my Fibonacci tool here. I'm going to take the swing low to swing high and back down in. And I'm going to see my 1414 terminates near structure. I'm then going to invert the last leg of the move and see if I can find any ratio confluence there. As I drag it back down in, what you're going to see is, yes, I have another 1414 happening right in there as well, giving me a pretty decent area here, if I just block this out, of a potential reversal zone. So if the market can rally back up into that, that's somewhere around 98.40s to 98.70s. Keep an eye on that. Drop down to your trading time frame. See if you can't find a decent entry around that 1414, around 89.50s. And that should give you, that's several trades that could potentially complete, 3 trades that could potentially complete this week. But remember what I said earlier on in this video. This video was really more about trying to teach you what I've been teaching Syndicate members for the last year. And if you're not at a place where you're trading consistently, where you've got a good handle on it, then you've got to start asking yourself some questions, because we only have about a month and a half of decent trading left for the end of until the end of the year. Because we're going to run into November. Into November, we've got Thanksgiving. Then we got a couple of weeks before Christmas. But even then, things are starting to thin out. Professional traders are starting to clear off their positions. They're starting to settle up for the year. Then we roll into Christmas. Christmas leads to New Year's. Trading is terrible during that time. We don't even trade here around that time. And before you know it, it's January 1st. So the question that you need to be asking yourself now is, if things did not go the way you wanted them to this year, in 2015, what are you doing so that 2016 is different? Because if you're doing the same thing that you did in 2015, just figuring that something, some magic is going to occur, that lightning is going to strike and you're suddenly going to become an incredible trader without making a change, without doing something different, you're wrong. It's going to be the same thing. It's going to be more losses, more pain, if you don't make the conscious decision to change something that you're doing. And if you need help with that, if you don't know what to do, go to tradeempowered.com, tradeempowered.com, and look at the Learn to Trade section. I have more free training, and Akil has more free training on that website than you will find anywhere else. It's stuff that other people will charge you thousands of dollars to learn, and you can learn it absolutely free at Trade Empowered. So go over there and sign up and make sure you're on the Forex Market Preview list so that you get the emails that I'm going to be sending out next week. Until tomorrow, gang, good luck, good trading. I'll talk to you then.